Hey traders, welcome to the daily macro chart review. It is about 3:40 here in Chicago. We are on the 15th of December. Let's jump and take a look at the charts. We've had a pretty bloody day today, and that kind of started actually a couple of days ago when they were trying to move those markets higher, following a pretty decent CPI number, only to reverse not long after those were after they came out, and then ever since then it's been pretty much a down road from there. I think the markets, just to kind of give you my 2 cents, I think the markets are probably looking past this inflation now, and we're starting to think about this inversion in the yield curve and recession and some tough economic times ahead possibly. We're getting into the earnings here as we're finishing off the last quarter into January, so I think there's a lot of jitter out there. I've been talking for the past several sessions about, some of those breadth indicators, some of those charts that are indicating that something, it's really fishy underneath this rally and underneath the surface. We're not having a lot of responses like you're supposed to have when you start to move to the upside. We were climbing on low volume. We had a number of new lows versus new highs. We had non-confirmation from similar markets like industrials and transports and stuff like that. The dollar was approaching important levels here to the downside, so it was a little bit of a perfect storm for the sell-off to shape up. And the question now it will be if we're actually beginning the larger decline in a wave C to the downside in all the indices, and we're going to go through the charts and take a look and see what the roadmap for that will be. But I just kind of want to run you through kind of my thought process on all of this and what I've been talking for the past several weeks actually here as we were watching the development of this B wave rally. So, let's see. Today, basically, we dropped about 2.2, and it was pretty much a straight sell-off from the open. 2.2% on the Dow, 2.5% on the SP500, 3.2% on the NASDAQ composite, and then you had about a 3.37% on the NASDAQ 100. Between the small caps and the mid caps was pretty much the same sell-off. New York Stock Exchange with 2%. Bonds went higher with yields lower, but the yield curve continued to be inverted here at, I think, at minus 70 or minus 80 bips between the 10s and the 2s. So that's still a large problem being out there. I'm going to take a look at the credit spreads and maybe put some charts tomorrow morning on the TED spreads and some of the others to just see, what reactions we've had on those markets following the sell-off, and if they confirm whatever is happening right now. Then we look at commodities, which took it down. Gold was pretty much a sell-off. You got almost a 3.5% move on silver. Natural gas on the other side went higher, which is good. And then, but the commodity complex was down about 1.2%. If you look here on the side, energy was the least affected today with only a 60 basis points drop, followed by real estate and utilities. So pretty much, again, a defensive posture. Consumer discretionary held pretty well, surprisingly, on the sell-off, because Tesla did not follow too aggressively, because Tesla has been selling in anticipation of this. So Tesla was kind of signaling that that's something that's going on, and I've been mentioning that through my updates. Then XLP in here as well, kind of coming down, and then XLC and XLK. They just got completely destroyed here with 4% and 3.7% in cryptos. Not huge drops, again, for how volatile this asset class is. But, Ethereum down 3, Bitcoin down 2. I think Bitcoin already found a top up there on that fourth wave. And I think we're going to push lower. And I think eventually we'll break below that 15K level. Okay, but I'll do a separate video on Bitcoin. So let's quickly, take a look at the counts here, and let's jump over here and take a look and see how this looks. And first, let me go and take a look at the daily candles. you can see in here what's going on in Bitcoin with the sell-off, and look at the massive rejection that the S&P 500 has on the daily time frames. And this was that CPI day when we pushed on December 13th, when we pushed higher, took those highs, those stops, and then reversed. And then there was a signal that the market, it could be in trouble. Similar story on the US 30, which is the Dow Jones. And this reversal, I think, will probably continue to move lower. NASDAQ, similar story. Gold rejection, silver rejection. US notes in here, bonds continue to push here. I think, they become obviously a much safer asset when stocks are declining the way they are, and bonds are giving you, interest rate coupons, by holding them. So, no point in holding crypto, no point in holding risky assets when you have bonds that are paying you, 4%, pretty much, one of the safest instruments out there. Then you have Euro, reversing a little bit on here, and then you have US oil, which kind of retested that breakdown level, and it's sitting about 76. I don't have a big opinion on oil for right now, although I do think that it's going to continue lower. So with that, let's take a look here at the counts. Let's go on the futures. What I'm watching is after the top in this B wave up into the 78.6. So that's how much we retraced in this B wave. If you look at the daily time frame, we surpassed the 61.8 and we came 78.6 of this latest decline. We've done, I changed the count again on this because it was looking, much uglier as an ABC. So I shifted it more to a WX, a triangle B up in C, to have a better look. And obviously it's a little bit easier to do this in hindsight, but I think this is more appropriate. We'll see what happens here. But with the break below these levels, I think the stop is well confirmed, and we should be trending lower, at least for a while. There's still, a chance that this could be, some kind of, 1, 2, 3, 3 in here. Try maybe a fourth wave without getting into the territory of the wave 1 and a fifth, and then a big ABC. It's possible, but even then, that means that you still have a lot to correct. This would be way too short for me to be part of the entirety of a wave 2. If you want to look at this as a flat correction, some kind of an ABC, you can, I guess, but to me it's kind of forcing the count. So we'll see how this behaves. Indeed, if the market reverses from here and goes completely bananas to the upside, then you're going to be left with some kind of an ABC in here, and then this becomes some kind of a wave 1, 2, 3, 4, and 5 with a flat, and then you push higher. So that's the kind of the bullish setup whenever you have a little bit of a C wave sell-off. But the fact that we were rejected from the trend lines, and from 78.6, and the whole kind of narrative here, especially with some of the breadth indicator and some of the fundamental stuff, points to the downside. We'll see. I'm always on outlook for, hey, what I could be wrong. What if this count, ends up being something else? Where could the surprise come from? And when you get a 5-wave decline, you could always kind of think of it as, hey, is this C wave of a flat? How would that look? And how would that can surprise me? So I'll continue to look for this as being a wave 1 of a larger wave C, there. And then, on the futures, we have a little bit of a different setup because, obviously futures are almost 24 hours and they're, they set up a little bit these waves in slightly different manner, but overall, we're pretty similar. So this does look like 1, 2, 1, 2, 1, 2, 3, 4, 5. So by this structure, that means that on the S&P 500 we would have 1, 2. Then we're doing a 3, 4, and 5 like that. Oh, that's why, because it wasn't, I don't have this labeled as, is not connected, so it's just a marker that I have. But let me just kind of show this, under preferences here. I'm going to go show future points. And, you could see in here you have 1, 2, 1, 2, 3, 4, 5. So I still think there is a bit more to go, on the futures market here. So you got your 1, 2, 1, 2, 3, 4, 5. So you get a 4 here and another 5 to complete this third you know, if this is done here, then you're doing a small fourth, one more push in 3 and fifth of 3, then another 4, maybe back to this resistance, then another 5, and that completes wave 1. So that's kind of what I'm looking for in here. Tomorrow is one of the largest expiries in terms of volume and number of contracts and stuff like that. It's one of the largest ever. So, and maybe some of those positions were already unwind today. Maybe that's why we had such a big sell-off. So we'll see what happens tomorrow with all those expirations. But December 16, it is I think it's a quarterly, monthly, you know, weekly. There's a lot of things happening tomorrow in terms of option activity, and those options are driving the market, no question about it. Let me just get a sip of coffee. All right, so that's what's going on you know, on the futures. Now, if I go on the cash market here, it's a slightly different. You can see the subdivisions in here, but you know, they're not far from each other. And you know, I would have to go maybe to a 15-minute chart to kind of see it a little bit better. And here you have a 1, 2, 1, 2, maybe 3, 4, and 5 here. And possibly, I mean, look at the touch on the 161.8. And this is on an arithmetic scale, so just the price scale. You know, just beautiful Elliott wave and Fibonacci perfection, right? You know, you can't really ask for more than that. We'll see if this is going to hold. If it's still a fourth wave, it's probably still in this subdivision in a 1, 2, 3, 4, and 5, maybe one more push. But I think that's probably done, and we're looking to kind of come back on this fourth. And just like I've showed you before, right? And then, you know, this was pretty directional, so I would expect maybe this one to be more sideways a little bit. You know, we can take a look at that having maybe the same size or maybe a little bit bigger in here. We'll see how we develop, but always what I watch is that alt 4, which is 4v3, not to surpass 39.46. So for a triangle, usually you stay within 23% in this fourth wave of a larger third. For a let's say more of a of a zigzag or a double zigzag, more of a directional move, you would get to 38% and no higher than that ideally. Anything above that, above 50%, like I keep repeating, it starts to smell like problems and that it's not a fourth wave. And Bitcoin just showed us something similar when you know, when the markets pull back overnight and those levels were kind of getting challenged. That was the first clue that, hey, that's not a fourth wave. So you know, here we are probably overnight and into tomorrow, depending on kind of how we move. We might do a little bit of a rally, and then, you know, that could take I don't know, maybe several hours until this unfolds, and then maybe we drop into tomorrow or into Monday for a new low. So that's what I'm watching on SPX. A very ugly count. I mean, very ugly structure here, you know, this whole thing, right? So that's why I still have it here as an ABC, but I think it's better as a WX, and then a big, you know, A wave in here, you know, with a triangle or a flat in B, and then push higher in a wave C, because it's, you know, it's got this kind of expanding look in there. So that's kind of where we are on the S&P 500, and that's what I wanted to show you and discuss a little bit in here in detail to kind of see where we are with the rest. I mean, some of the stocks that we shorted did really well today. We had Coin that continued to move lower. We had, you know, RCL. We had JP Morgan. I mean, you name it. You know, we've had losses here of, I mean, when I posted this out about 1:30, we had 270 new lows versus new highs. And then as the day was unfolding towards the end, you had 476 new lows versus 66 new highs. A bunch of declining issues in here. So a very red market, with the exception of Tesla here, in the consumer cyclical, consumer discretionary, which was basically actually even positive on the day, because it started the day negative, but then it switched back higher on there. So you know, again, one more thing I wanted to show you was, and we'll talk about the euro as well, but the other thing I wanted to show you was this, which I posted this morning. You know, I said nice little bear flag on the 5 minutes. I mean, this you know, it's kind of what you want to see, and you don't know if this is going to be a quick short one or if it's going to be a larger one. This one actually dropped quite serious if I go on the SPX future, I mean, you could see kind of how much that little move, let me just go on a 5-minute here, and the little bear flag. I mean, look at how much decline it created after, just another big, maybe almost like a 5-wave move out of there, right? So you say that you take it from the breakdown all the way down here, it's a 2% move. That's huge in the S&P 500. So these are, sometimes staring you in the face. Same thing that I kind of posted, I think, a couple of days ago, looking at this move as an ABC higher, right? Just a clean, impulse from the lowest failure. You got an ABC into the 61.8, and then, that's the clue that you're going to push lower, very likely. This whole thing could have been an ABC here, right? But the clue for that, you got to overtake this, right? And that never happened. So when that fails to be overtaken, then this does not get confirmed as an ABC, and then, more than likely you're pushing lower. So little tricks and tips, for tricks and tips for LA wave analysis and kind of how to think about it when you see situations like this. Okay. And then what else I wanted to touch on in here? Yeah, India markets. Let's quickly take a look at that, because that was again just a market that's been trying to make new all-time highs, and it did. But it's kind of suspect here, right? You're moving above this channel's resistance, and you're doing so far in 3 waves. Now, it's a beautiful structure. It could be a big flat. If it is, oh my goodness, the C wave is going to destroy the Indian market. I don't want to be that dramatic, and might not be what that is. But even if you're just counting this as a 1-2, you still need, fairly decent decline. And if you're breaking below 18,147, and that's a 5-wave move, then you rest assured you're going to have a B wave and then a C wave decline to create that second wave. And then acceleration happens. And if you're coming below the B wave right there with 16,500, then you know that you very likely have a flat on your hands. Now, you could have a flat or you could have a running triangle. Always remember that anything that kind of starts in 3 waves, like that, and then it moves 3 waves higher, like that, right? Could be either a flat if you're coming lower in 5 waves, like that, right? Or it could be a running triangle where you're basically, let me just delete this, and I'm going to do this one more time. So you go in an A, B to new high, so that's a 3-wave move, and then C, D, and E, and that's a running triangle, and you are moving to new highs. So not necessarily just because you have a 3-wave decline and a 3-wave rally, it means that you're going to get a C wave with a flat. The main idea is you're going to get the sell-off. And if this happens in kind of a 3-wave move, then you might have a triangle on your hands. If it moves in a 5 waves, then you likely will know that that's a flat. But everything that kind of starts with a 3-wave move like that, it's pretty much going to be either a flat or a triangle. Sometimes you will get a WX and a Y wave, but I think those are a little bit rarer. So that's kind of how we're looking at it. And this is how India looks at a larger degree, right? A, WXY here in 3 waves, and then ABC for B. Under the bullish, under the bearish scenario. And then the other one is, see, I was looking for a flat here, but since this is a 5-wave move, now this doesn't work. So what this is going to do is it's going to push this wave 1 like that. So that's a 1-2, and now this could become, again, and this doesn't matter if you're not trading this market. It's just we're doing kind of exercises and counting in here, so you can get familiar with the way the structures get built, and then that's how you will look to have the next push higher, because you already broke above it, so you're building the first one. That's your confirmation. You're putting in 2, you're getting a 5-wave move in here, so you still got to do, and even this one, I'm not fully convinced. It might not be over. I mean, there might be 1, 2, 3, 4, 1, 2, 3, 4, 5. It could still climb, right? But the more it comes lower, and that's a big support right there. We'll see what's going to happen if they break it there, but if they bring it there. So look for a second wave pullback, maybe ideally smaller than the wave 2 of a larger degree, and then for a push. But the deeper this gets, if it passes 61.8, 78.6, then you probably have an ABC on your hands. Okay, so that's there. And then let's quickly take a look at gold before I finish up. And again, I mean, look at this. All right, this was a nice little pennant in there. Looks like a bearish one because as you were climbing to the upside, you were losing momentum, and gold sold off in here. I don't think it's an ending diagonal though. You have a 1, 2, 3, 4, and then you have a 1, 2, 3 triangle in 4 in here with the fifth wave, and you have no overlaps. So it would have been an ending diagonal if gold would have made one more new high, which is then it would have been like this, 3 waves up. And then let's say that was 3 waves down. So 1, 2, 3. Then you would have done a 4 and a 5. That would have been an ending diagonal. The way it is set up right now, it's a 1, 2, 1, 2, 3, 4, 5. So that's your 3. You can see it in there. 1, 2, 3, 4. A, B, C, D, maybe a small E in there, and then a push higher in fifth wave. So that's how I'm kind of looking at it for now. But let's see if we can break below 1726, and that would, actually give this much better confirmation. Again, keep an eye on the bullish count. If this is a 5-wave move, it could be wave C of an ABC flat, or it could be wave 1 of the next bull higher. Under both scenarios, I think this move still it's required to continue lower and come somewhere into the 61.8, 50% neighborhood retracement of this guy, and then we'll see if they're able to break it. And that's the clue that you're pushing higher. So that's on gold. And in silver again, a very beautiful touch of the 61.8. Actually, I think we went a little bit higher than that. Right there was 61.8. The structure here was almost textbook in terms of its rally. You have a nice move out of here in wave 1, 2, 3, 4, 1, 2, 3, 4, 5, and now you're pushing lower. We're watching for 22 to be taken out, maybe create a head and shoulder, and then once you break below 2058, then the next move to the downside begins. And let's also touch on the euro dollar, because I think that's important as well. And I'm going to go on Forex here, and this is what happened. We've been talking about this ending structure here in the euro into this huge band of resistance. So if you go on a 2-day chart, you'll see it. Right there, the lows from March 2020. Near a previous 4th wave high, up in there. Those are ideal levels of resistance, and it came exactly as Christine Lagarde were speaking and saying that they're actually quite hawkish. They're going to increase rates with multiple 50 basis points or something like that. I didn't follow exactly, but it's kind of what I caught up on Twitter. And then as soon as that was over, then they sold it off, and you saw maybe a run into the dollar safety because of also. So these markets, they smell each other, they work in consensus, and when they differ, then those are alarm signals to kind of take into account. Again, 1, 2, 1, 2, or a flat in here. 1 A, B down in C. To me, this looks like a 3-wave move. This in here, it's a little iffy, but anyway, I'll give it a 4th wave in here. At least a correction back, maybe towards 103. We could be getting. Let's see. If I'm looking at this degree, I can do a 4v3. So ideally you would come back. You see how nice they align, 38.2% with the 4th wave from previous sell-off, and that would be a decent target for a 4th wave, maybe followed by a 5th, and then then we'll see from there. Then you're probably going to get a 2nd wave pullback, and then a larger rally begins. But this was a pretty good confirmation here. I think that you're having a pretty decent 5-wave move. Again, I don't think that this is an ending diagonal. This looks like you're having a 1 in here, 2, 3, triangle 4, and then up in 5. You even though you got into the territory of the wave 1, you finished here as a triangle. So, I don't have a problem with it. Even as an ending diagonal, I think wave 3 or wave 5 is bigger than 3, which is not really supposed to happen. But, either way, I think we're done in here. And this is the move that kind of confirms that. So if I go to a 15-minute chart, I'm going to be looking to, sell rallies tonight to tomorrow, see how far we can get. If we can get back towards 106.66, I wanted to continue to sell those up. And this is basically the fib that I'll be watching, 38%, 50%, 61.8, all the way up to this level. I'll be happy to sell and build a position. Anything above 78.6, I would start to get worried and start to kind of get out of those positions. So, we'll see what happens kind of overnight. Right now, the futures market is closed, but, we'll keep an eye on it. But I think there is an opportunity here on the euro market. And, that means the dollar, should be pushing higher. And here is the dollar. Up here, let's take a quick look at this. Now this is the index that the FXCM broker is using. Slightly different from the dollar index, not by a lot, but look at this support. The sell-off happened right in there, previous fourth wave. You're moving down in 5 waves, in either wave 1 or the wave A. Depending on kind of how you look at the larger structure and how bearish you are the dollar, because the whole thing could be just a big ABC, and then you're making new highs in the dollar. I doubt it. I would probably go more with the idea of a wave 1, 2, 3, 4, and 5, and we're getting further sell-offs. But we cannot dismiss the dollar getting strong, because if we're hitting some kind of bad economic times and things like that, and the bonds are well, there's a little bit of a difference there, because if the bonds are rallying, yields are coming down, and then, the dollar supposedly sells off. But it's a lot of this differential between what's going on in the euro and the US in terms of kind of how that looks. So, we'll continue to keep an eye on it. I guess you can have a declining market with a declining dollar. Why not? Especially since the dollar has been so aggressive lately. So we'll keep an eye on those correlations, guys. But thanks for watching. Hopefully this was helpful. Let me know your thoughts. I'll be happy to help in any way I can. Thanks for watching. I'll talk to you later. Bye-bye. Hey guys, so just a quick discussion about Bitcoin. It's about 4:10. I just finished recording the other video. It is uploading at the moment. And let's jump over and take a look and see kind of what happened in crypto. Bitcoin rallied yesterday, and we had a pretty good move into 18,400 in here, right into the previous zone of support, now resistance. We stuck our heads above the 50-day declining moving average, and then we were rejected from there. Up here you have the 200 week with a sharply declining 200-day moving average. So we remain below the key moving average as well, and that should work in the favor of the bears. Now the structure out of here was pretty interesting. We'll see how we're going to close this week, but not a lot of strength into this move. Like I said, this huge level in here, it's probably gonna give Bitcoin a little bit of trouble, and unless it closes and it climbs and closes above it, at least on a weekly basis, I don't think there's any reason to think bullish this market. Here is how we're looking on the 1 month. We still have about 15 more days to go, 16 days to go here till the New Year's Eve. No confirmation whatsoever just yet, and this can change at any time. We'll see. Ideally, what you want to see a bullish engulfing out of here on the month of December, which means that this whole thing here would have been a failure to continue lower, and that could be a bullish signal for the month of January. So that's what I will be watching and see kind of how that month closes. Back here on the daily time frames, very nice reversal formation here on the daily. Now we're coming back into support. So just like we hit our head above resistance, that's exactly the same way that we're coming back into this band of support. So I'm expecting a little bit of a pullback from here, and then we'll see if they're able to kind of crack back through that. So let's take a look here at our charts on the home page, and the larger count, it's still, in my view, possible ending diagonal in a wave 1, 2, 3, 4. And I know Pinko, I think, posted a question asking me about the size of the fourth wave. I'm not sure if he was referring to this fourth wave or if he was referring to this fourth wave. When you guys put any questions out there, try to either put a chart or, try to tell me which wave forward we're talking about. There were a couple of fourth wave small ones at the small smaller degree inside the structure as well. So I need to know which one it is. If you have, you know, a snapshot of one of my charts, or, you know, if you want to put it on your chart, whatever, or if you want to tell me a label like a minor, minute, you know, whatever it is, so I know how to properly respond. But if you're talking about this fourth wave, in an ending diagonal, wave 4s are supposed to be smaller than 2, right? By, you know, by structure, by design, these fourth waves are these waves, the corrective waves in an ending diagonal are contracting, and wave 1 is the largest, wave 3 is smaller than 1, wave 5 is smaller than 3, wave 2, it's the bigger correction, wave 4 is the smaller correction, so everything is kind of contracting in here, and that's why we're labeling it like that. So based on this, and based on this rejection, now I would look for this market to start to build the next, you know, the next declining move lower in a wave 1, 2, 3, 4, 5. But if you caught it, you cannot have a 1, 2, 3, 4, 5 in an ending diagonal. You're supposed to have zigzag, so it's got to be an ABC. So that's going to be a wave A, up in B, and then down in C. So this will be a 5-wave decline, followed by a B wave, and then eventually below 14 to 13K when you finish this off. You know, we'll see if that's going to pan out. We're still, you know, nicely contained within this this channel in here. So a break below it and a break below 16,679, I think will start to increase the odds of this account working, and will probably unleash more selling from the Bitcoin community, at least on the technical basis. I think that's what's going to kind of trigger that out. I wanted to repeat also the 1, 2, 1, 2 count in here. These the second waves are very similar if you're watching them, right? So this would be a second wave at this minor degree, and then at a minute degree you would go like that. So very similar waves in here. I don't have a problem with it. I usually like this wave to be a bit smaller, but this could still work very well, except that would mean that we're having quite a bit of crash coming in Bitcoin, and that's why I'm using this as an alternate with an underlying line in there. So 1, 2, then another drop here in a wave 1, up in 2, and then 3, 4, and 5, and so on and so forth. So these are the 2 counts that I am watching. Now let's jump over and take a look at the smaller time frames. Why don't I have the counts in here? Let me go to my floating machine, and I think I probably, no, I don't have them here, but I do have. Okay, so what I wanted to touch on was, remember when we were talking last night about this possibly becoming a fourth wave and placing this fourth on a separate count, this third being over there, and this fourth wave still developing, and maybe that's why Pinko was asking me too. And I specifically talked about this last night. I said, you know, I don't know, I'm not sure how it's going to look, but I know that if you're breaking below that, and if you're starting to kind of get back below 38.2, 50, 61.8, it's very unlikely that you're going to get a fourth wave out of the structure. And I think the best way to count this is like that: 1, 2, and then you have your another 1, 2 in here, 3, 4, and 5 for 3. Then you have a triangle in 4, and then a 1, 2, 3, 4, and 5 for 5. You know, it's not super perfect, but it's the best I would have at the moment. I'm not gonna, you know, kind of nickel and dime the count. It's clean. It goes up. You're getting rejected, and I think you're getting rejected in an impulse. And the fact that you've broken below this wave 1, that makes even more, you know, this fourth wave, you know, unlikely to be part of the structure, right? Let's say that you would take this third, move it up there, and then have a very deep fourth wave. You already penetrated the territory of the wave 1, and you've done so impulsively. So I don't think that that's the case. So now we're building that structure. Let's go to maybe a 15-minute chart. We're watching to see how this could work. So let's just decompose this. I don't think I worked on this today, but let's just do that. You know, let's see what's the best way to do this. So I think that what you had was, now let me go to a 5-minute, maybe even better, so we can see it a bit more. I'm going to scrunch it up just a tiny bit. You know, the question is, can you have a diagonal here? I don't think so. I think you're getting a series of 1s and 2s. So possibly this was wave 1. And a wave 2 up in there. Then you have another 1, 2, 1, 2. 3, 4, 5, I think you're still, you're still kind of trying to decline and finish this sequence. Let's see back in here. If you place the wave 1 here just to reduce the subdivision and give it a little bit more room, and then you place a wave 2 there, okay, let's go that's an ABC, whatever, then you go in another one too. I think I would probably like this better. Let me just quickly show future points. And so let's see that's the bottom of the wave 1. Then you go up in 2, then you have another 1, and then you're going up in a second wave. You got a 3, 4, and 5 to complete a third here somewhere soon, and then you get a 4 and another 5. That's kind of how I'm looking at it at the moment. I don't think it's a corrective structure. I'm going to spend a bit more time on it. I mean, the 5-minute charts are sometimes clear, sometimes not that clear. But I'm going to be looking to see, how the sequence will look to kind of secure a wave 1. Okay. If you're starting to, already move, from, to push to the upside in here, what I would watch for is I would definitely watch, again, just a fib retracement. So I would go from this high to this low and then continue to watch this. And if you're starting to climb, higher than this level in here, 17,977, then I don't think that this it's going to be considered an impulse. I think that's going to be probably something else, and we kind of have to change things. But for right now, I'm going to go with the idea that this is an ongoing impulsive decline. And I think by the way this looks, I don't think it's finished. You'll probably finish maybe overnight into tomorrow or something like that. And then overall, right, we're watching this, and then it will give you another opportunity to maybe short Bitcoin on a second wave pullback, after this kind of wave 1 gets completed. If you want to wait a little bit more, you could wait for a break of this B wave here, which is at about 16,679 one more time, and then once you break that, then I think it's going to become more clear that this is actually declining lower. So we'll continue to watch this. I would be definitely, based on this rejection, I would continue to be a seller of Bitcoin on rallies. Now, we're still kind of holding the bottom of this channel, so I want to be, cognizant of that and just respectful of that. Again, that would be another indication that the odds are favoring further decline. So watch these levels, watch any fib pullbacks and kind of how they react, and then, we'll continue to trade it, minute by minute, hour by hour, see what happens with this market. All right, we're following along. I think so far we've been, pretty okay in kind of looking at this correction and identifying some of this stuff. And it's not always 100% perfect, but, I think, Elliott Wave continues to give us a pretty good roadmap if we're trying to stay rational and look at the counts and the waves and kind of the language that it's trying to tell us. All right, guys, I'll be talking to you a bit later. Bye-bye.